Market Prospects, delivering timely information and education to prairie farmers for over 30 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Agricultural and Resource Economics and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
This week on Market Prospects, we get the U.S. perspective on agricultural trade. Joining us is Dr. Robert Johansson, Chief Economist with the United States Department of Agriculture. Dr. Johansson, thanks for taking time to come on Farmgate.
Oh, it's my pleasure. It's something I look forward to every year.
Right off the top then, please review current global stocks, trade, and prices for wheat, feed grains, and oilseeds, and give us your projections for trade in these commodities for the rest of the current crop year.
All right, that sounds great. I'll start off with coarse grain production in the crop year 2016-17. We know it's projected to be a record high with record crops in the United States, Brazil, and Argentina. Coarse grain ending stocks also are projected to be at the highest level in nearly 30 years. Of course, as a result, we've seen prices in the United States and also globally move lower, with corn expected to average this year at about $3.40 a bushel at the U.S. Farmgate. Global coarse grain trade in 2016-17 is projected just to come in a little bit lower than the record which we saw in 2014-15, but corn trade is projected at a record high, important to a lot of producers here, of course, in the United States and as well as around the world. This is consistent, this level of increased trade is consistent with growing consumption levels globally as demand for livestock and poultry feed continues to grow with income and population. In the absence of any major supply shock globally, stocks are likely to remain relatively high, giving the fact that we have had demand growth, but it has been somewhat moderate. Also, from the United States perspective, we've seen weaker exchange rates in other countries have helped partially offset other countries' declines in grain prices, thereby supporting some area in production that would otherwise be expected to come out of production.
What are the USDA's expectations for global production, trade, and prices for wheat, feed grains, and oilseeds for the upcoming crop year?
I'm just going to review 2016 first, and then we can talk about next year's crop in a second. For 2016, we're expecting it to remain a bear market for wheat in the United States, with farm prices forecast down for the fourth consecutive year, at the lowest level in more than a decade at around $3.80 a bushel. We know global production has increased for 4 straight years globally, all of which were records. And in general, the 16-17 wheat outlook is for record production, increasing stocks, and diminished prices. Although the 2016 crop was large, as I just mentioned, there were quality problems in several countries, particularly in the EU. So we still see a premium for high-quality milling wheat. In 2016, global production, consumption, exports, and ending stocks are all projected to be records. Global stocks-to-use ratio continues to rise and has reached the highest level since 2001-2002. Turning to oilseeds.
Sure, let's look at that then.
Okay. Global oilseed production, exports, and ending stocks are expected also to reach record highs in 16-17. This is kind of a reoccurring story here for all the commodities. We've had great weather globally for production. Global soybean production, which accounts for about 60% of the oilseed total, is record high due to large crops mostly in the United States and Brazil. Soybean production in Brazil, where harvest progress is currently ahead of last year, is expected to remain at record high levels due to increasing acreage and higher yields, which we're projecting for Brazil. Global demand for soybeans and soybean trade are also expected to rise at a similar pace to last year. Brazil and Argentina will continue to compete with the United States for market share, particularly going to China, which we are projecting right now at 86 million tons of demand for soybeans going to China, which is about 60% of the total global import level. With abundant supplies, however, over the past few years, prices have come down over the last, from the highs we saw 3 to 4 years ago, when Chinese demand was growing at a much faster pace. We do expect prices to rise above last year's levels, supported by the demand growth in China, and we are seeing economic growth in general in China be a little bit higher than we had expected, which is propping up their demand for soybeans in particular. But we still are seeing lower prices for soybeans relative to what we saw a couple years ago. Right now, we're projecting this year's price to be at the Farmgate in the United States at around $9.50 a bushel.
Okay, so international trade negotiations and trade agreements are currently of great interest. What impacts on global agricultural trade might be expected from changes to existing agreements and negotiations on new agreements?
Well, of course, trade is critically important for U.S. producers, Canadian producers as well. U.S. ag exports are currently forecast to reach $134 billion in fiscal year 2017. That's up from $129.7 billion in fiscal 2016. U.S. ag exports account for about 20 to 30% of the value of U.S. ag production, depending on how you calculate that value. And in 2015, U.S. ag exports generated an additional $170 billion in economic activity and supported nearly 1.1 million jobs in the United States, over 750,000 jobs in the non-farm sector. Of course, trade with Canada is expected to remain important and to exceed $40 billion in both imports and exports between U.S. and Canada. Of course, a little bit above $20 billion in imports and a little bit above $20 billion in exports, which gets you to the over $40 billion level that we're projecting. It's difficult to predict how specific agreements or new negotiations might affect economic and trade forecasts. However, U.S. farm groups continue to support meaningful trade liberalization and enforcement of trade rules in bilateral, regional, and multilateral agreements.
What are some of the major indicators that the USDA considers as it prepares forecasts for global agricultural production, trade, and prices?
Well, it's a great question. For the U.S., of course, we start with our National Ag Stats Service, NASS. They do a lot of surveys and get us information on yields, area, and stocks. But we also have a lot of other information, of course, from USDA, in particular on trade for our outstanding sales and prospective sales in general. For global production, my office, the Office of the Chief Economist, the World Ag Outlook Board, evaluates satellite imagery and other weather reports to evaluate crop production throughout the development of the global crops. But additionally, we use government reports in the region as well. When it comes to trade, we consider the size of the crop in competing countries, as well as the timing and the relative competitiveness of the U.S. relative to other producers in various markets. And we add to that both information on inspections, what is actually shipped, for example, and outstanding sales to evaluate how the export campaign might evolve. Exchange rates, of course, temper our thinking about trade prospects for the remainder of the crop year.
So which international trade issues should Western Canadian farmers watch most closely as they prepare for a new production year?
Well, of course, the new administration will be determining what their stance is on trade. Of course, and I've already mentioned how important trade between the United States and Canada is, but I'm sure your growers will be watching those developments. But what we'll be looking at in addition, as we always do, world economic growth projections, for example, to see how Asian countries' economic growth is progressing, as well as some of our competitors such as Brazil and Argentina and the EU. And other macroeconomic factors such as exchange rates. They're all important for our trade outlook, and of course, your farmers will be watching those closely. Based on our most recent forecast, world per capita GDP in general is expected to rise slightly, so that would indicate we expect demand to increase as well. We're expecting that to rise to 1.6% on a global level. In emerging markets, of course, are always very important to this picture, as well as we trace the movement of households into the middle class and the dietary changes that are associated with that. But we expect, for example, China to remain at a 6% per capita GDP growth rate next year, as well as off into the next roughly 10 years. A lot of things could change that, but that's what we're projecting right now. Global trade volume is also forecast up from 2016 levels, 1.3% versus 2.6%. The U.S. dollar is expected to remain strong, however, and that's going to make the U.S. trade position very competitive with other countries.
Well, Dr. Johansson, we look forward next week to your assessment of the grain and oilseed outlook. It's been a pleasure to talk to you.
Thanks very much.
Farmgate returns after a brief commercial message.